Big day in the market. At one point to start the day, the Nasdaq was up 0.73%. It finished down 1.78%. That's a 2.5% swing. It got as bad as down 1.9%. Some notables, guys. Apple down 2.2%. The biggest loser on the S&P today, CRM, Salesforce.com. Second biggest loser, Tesla. Remember, Tesla announced a 10% Salesforce reduction. Guys, if you like this reaction to the news so quickly, please follow the channel, share it with your friends. We do these 4 or 5 videos a week where we react directly to the news. Great place to be. NVIDIA continues its slide, down 2.5%. Financials, not so bad. Banks didn't do so bad today, a little bit up. Some big winners today, actually, interesting enough. Intel. Intel was actually down today. I got a notification on our software that it went below a certain price, rebounded, went up almost 2% today in a world of red. Again, a few places here and there. United Health up, Eli Lilly basically break even. Google and Meta fell 1.8 and 2.3% respectively. Isn't that interesting? Netflix down 2.5%. They report on Thursday. I kind of like this blue color here on this pen for these red screens. So not bad at all. Now, what happened today? Guys, you can sit there and look at the news all you want. They're going to tell you this happened, this happened. At the end of the day, we don't know why everything just fluctuated. Remember, we had Iran attack Israel this weekend, but they shot down an overwhelming percentage of the drones and missiles that came in with the help of other Middle Eastern countries, the US, etc. We have inflation still being a worry. We have rates going higher. There's all these things that happen in the economy. That's why we tell you, don't try to guess. That's why on this channel, we're trying a bottoms-up approach to investing. What that means is focus on the smaller companies and buy good companies, great companies at good prices. And if stocks fall and the fundamentals are the same or what you expected, you continue to buy more. Not Intel. Tesla is the prime example of this. At $414 a share, it was doing roughly $55 billion a year in revenue. Now it's at $95 billion, and their stock is down from $414 to $160 or so. If you loved it at $414, you should be selling your soul to buy it at $160. If you don't like it at $160, but you liked it at $414, I asked you a question. What are you doing? Are you an investor or are you a speculator? Do you get your success based on where the stock price goes in the short run, or do you worry about buying good businesses at good prices? Now, guys, another reason to subscribe. Tomorrow morning, we're releasing an exact video on Tesla specifically to talk about the exact point. So make sure you subscribe and check this channel again tomorrow morning. There are a lot of really great companies on the screen, a lot of wonderful companies on the screen. The goal is that when you see a sea of red, I want your mentality to change like mine did 15 years ago. And it still takes time, even after the mentality changes, to really embrace it. But my mentality went from I hate red days to I love red days. 20 years ago, when the market was crashing, I was scared. I was like, oh my God, what's happening here? The market's crashing. This is terrible. And I didn't like that feeling inside. I hated feeling that. I was in college and going, oh my God, this dot-com crash is awful. Why? Because I didn't understand fundamentals. I bought a story and I relied on the stock price to go up, not realizing that when you overpay for a good story, you're making a bad investment. The internet was the best thing to happen in the world probably in the last 50 years. And guess what? The vast majority of internet companies either went under or lost an insane amount of their value, 70, 80%, even for the good ones like Microsoft. Some of them haven't even recovered. Look at Intel. Intel had an all-time high of 75 to 80 bucks back in 2000. Since then, it has not surpassed that, and revenue and profit are several times greater. And I repeat this over and over on this channel and our main channel, Everything Money. The reason I do that is I want to make sure you're brainwashed about that, like I brainwashed myself. You have to remember over and over that it's possible to overpay for a good thing. If you overpay for a good thing, it makes it a bad investment. This has happened time and time again. Best car in the world, call it Ferrari. Awesome. Would you pay $100 billion for a Ferrari? No, Paul, that's ridiculous. I think it's ridiculous to pay some of these prices for these companies out there. Is it the same as paying $100 billion for a Ferrari? No, but at some point, overvaluation is just absurd. Whether you lose 99% or 99.9%, it doesn't really matter. The point is you're probably going to lose a lot of money or sacrificing a lot of potential gains by overpaying. So our goal is to teach those fundamentals. Take those fundamentals to make good purchases on these great companies out here. And then the way you're going to make more money, let these companies compound. You look at Microsoft. Microsoft, at the peak of the 2000 market, had like $52 a share. Went all the way down to 11. By the way, it didn't surpass $52 a share until 2015 or so. From 2000 to 2015, it went nowhere. It went even. And then since then, it's now 400 plus. The business has gotten even better. But guess what? Between 2000 and 2015, the business was tons better. Several times more revenue, several times more profit, and the stock was even. Why? Because when you overpay for a good thing, it makes it a bad investment. And guess what? When the stock was $11 a share, I had a meeting with a tech CEO, and I was talking about Microsoft and how I was buying it at 17 to 20. He's like, oh my God, that's stupid. I was like, wait, no, of course. He's like, I would never buy Microsoft. I'm like, come on, not never. He's like, Microsoft's dead. I'm like, dead? It's grown 7 or 8% a year. Its revenue and its profit 10 or 11% a year for the last 10 years. It's a dead company. Tech is too fickle. It'll go down the tubes. I was like, oh my God. In fact, I even said, well, you'd pay $50 billion to buy it with zero debt and $100 billion in cash. Nope, I wouldn't even buy it then. That's when I realized that the emotion of investors is going to bury them. And that's why I wanted to create this channel and this community. I wanted people to have a rational place to have a conversation with like-minded people. So if you're interested in that, interested in not being that dumb CEO, click the link below, join the community. It's $7 for 7 days on its trial. And guys, the next couple of weeks, we're going to have a wait list that's going to be quite a bit longer. So make sure you sign up now to avoid the wait list. Now, back to the markets here. These are great companies. By the way, you know what I saw the other day? Speaking of Google, since Google went public, Domino's has actually outperformed Google as a company. I was actually surprised to see that. Domino's Pizza has outperformed Google's stock as a company. Now, I haven't looked at the fundamentals in Domino's in a long time, but Google is an incredible company. And based on valuation, if their valuation is the same, I'd still rather have Google. It takes a lot more capital to run Domino's and grow Domino's and do that than it does Google. So I love that. Meta, we all know my history on Meta. It's too soon for me. Gets me scared talking about it. Costco, the Charlie Munger favorite, down 1.8%. Pepsi, down a little bit. Where's Coca-Cola? Right there, right above it, barely down. Guys, markets are fickle. As we always say before, I've talked about this 1,000 times. Over a long period of time, stock values go like this, but the pricing goes like this. Mr. Market's euphoric, Mr. Market's sad. Don't think that just whatever price they're quoting means that's the value of the stock. The value of a company is its intrinsic value. What would it pay during a normalized period of time over long periods of time? And your goal, if you buy individual stocks, is to buy them when below this line. Now, if you're buying ETFs, which I highly recommend people do, your job is to invest no matter what it is. Why? Because over time, you'll make about the average. And that's the key. And I'm going to keep repeating that till I'm blue in the face because even I believe this to my core. And even though I love picking individual stocks, there'll be a time when I probably dabble in some ETFs because I sit there and say, you know what? There's a lot of great buys out there. I'll just buy a whole group of them in an ETF. And that's a great way to play. But right now, the big key here is we've had a great bull market. Don't confuse a bull market with being a genius. Have the right fundamentals and right process to buy the right companies at a good price. And if the stock goes lower and your thesis is still the same, you can keep adding to that company and wait for it to explode. Because guess what? Eventually, the market will pay attention. If a company keeps driving its revenue and profit, eventually the market will pay attention. It has never not happened that I can recollect. Things go in and out. You know, recently on Twitter, a guy said to me that he thinks Bitcoin will outperform all asset classes over the next 10 years. And I said, what makes you say that? He's like, well, look at the last 10 years. And I just went, oh boy, that's a big thing. But a lot of people think that way. I want you to be smarter than the average investor. You don't need to be smarter in the sense of being a genius. You just need to be smarter and better with your emotions. If you can handle your emotions better, that will help you make better fundamental decisions. When you see the intrinsic value and the revenue and profit increasing and the cash flow increasing, you'll pray for bad markets. I love red days. I love days like today. And I want even more. Yes, that sounds mean, but I would love for the market to go down 60%. Nothing would make me happier right now than that. I want you to be in the same boat with me. I want you to feel that same excitement. So guys, if you want to see the 33 companies that I'm hoping fall a ton so I can buy them, watch this next video. And don't forget, click the link below, $7 for 7 days. It'll change the way in which you feel and think about money. Thank you for your time.